Way forward, Nilesh Shah, the MD of Kotak Mahindra AMC, says the overall growth story in India continues to remain positive. He also recommends a shift to private sector banks from NBFCs as the balance sheet strength of the private banks are far better than that of NBFCs. Listen in.
There are certain concerns on the market in terms of valuation, liquidity, FII selling. But at the end of the day, if you look at the overall growth story, it still continues to be pretty solid. Second quarter earnings will be a little bit subdued because of the good monsoon. Last year, we really didn't have a good monsoon, so there was no flooding, there was no stoppage of highways, there was no restriction on goods movement. But this time, in many parts of India where we traveled by road, there was restriction on goods movement, either because roads had become bad or it was flooding. So my guess is that the second quarter results will be subdued because of good monsoon. And it's the third quarter and fourth quarter where people will be looking forward to acceleration in earnings. NBFC sector looks expansive. In some sense, NBFC sector exploits the regulated loophole outside of banking system. The Reserve Bank of India restricts certain amount of lending for banking sector from a risk return point of view. And that space is occupied by the NBFCs today. I'll prefer private sector banks over NBFCs. They are available at almost half valuation, men to men, one company versus another. And their return on equity, their balance sheet strength is probably better than NBFCs. So I think it's time to move from NBFCs to private sector banks.
All right, just once more, the clarification.